Imagine a world where the US dollar is no longer the king of global trade. It's not just a dream. It's happening right now. In this video, we'll show you how BRICS countries are creating a new system that could shake up the world economy. For decades, the US dollar has been the go-to currency for international trade. But things are changing fast. BRICS nations, that's Brazil, Russia, India, China, and South Africa, are working together to challenge this dominance. They're introducing new payment systems that don't use the dollar at all. This is big news, folks. India and Russia are leading the charge, aiming to reach $100 billion in trade by 2030 without touching the dollar. And it's not just them. All BRICS countries are buying up gold like never before. They're preparing for a future where the dollar might not be so important. But wait, there's more. China is stepping up its game with a new digital currency. This could make trading between BRICS countries even easier and cheaper. The world economy is changing, and BRICS nations are at the forefront. So what does this mean for the US dollar? Let's find out. While China's digital currency is making waves, another partnership is quietly reshaping the global economic landscape. India and Russia are joining forces in a way that could change everything. Their growing relationship is more than just friendly diplomacy. It's a strategic move that's already having major impacts on world trade. Let's look at some numbers that might surprise you. Last year, trade between India and Russia hit $65 billion. That's a huge 33% jump from the year before. But here's where it gets really interesting. India is now the top buyer of Russian oil. Since 2022, India has doubled its oil purchases from Russia. This isn't just a small change, it's a major shift in how these countries do business. But why does this matter? Well, it's all part of a bigger picture. India and Russia aren't just trading more, they're planning for the future. During a recent meeting, Indian Prime Minister Modi and Russian President Putin set an ambitious goal. They want to reach $100 billion in trade by 2030. That's a big number, and it shows these countries are serious about their partnership. Now, you might be wondering why Russia is so keen on this deal. Here's the thing. Many countries have put sanctions on Russia, but over 85% of the world hasn't agreed to these sanctions. This means Russia can look for new partners, and India is a perfect fit. But there's more to this story than just oil and trade numbers. Putin himself has talked about how important this partnership is. He said, "BRICS must develop our own settlement system that includes the global south, enabling us to conduct transactions in our own national currencies and not the US dollar." This quote shows exactly what Russia and India are trying to do. Create a new way of doing business that doesn't rely on the US dollar. So what does all this mean for the world economy? Well, it's not just about India and Russia. This partnership is part of a bigger trend. BRICS countries are working together to change how international trade works. They're creating new systems, new partnerships, and new ways of doing business. And as they do this, they're moving away from using the US dollar. This India-Russia partnership is more than just a trade deal. It's a sign of how the world economy is changing. Countries are finding new ways to work together, and they're not always following the old rules. As India and Russia get closer to their $100 billion goal, they're not just changing their own economies, they're changing the whole game. While China's digital currency is making waves, another revolutionary change is happening right under our noses. Russia and India have quietly launched a new payment system that's set to shake up global trade. This isn't just another financial tool, it's a game changer that could rewrite the rules of international commerce. So what's so special about this new system? Well, it allows Russia and India to trade without using the US dollar at all. That's right. These two economic powerhouses are now doing business on their own terms, free from the influence of American currency. But here's where it gets really interesting. This new payment system isn't just about Russia and India. It's part of a much bigger plan that all BRICS countries are working on. Brazil, Russia, India, China, and South Africa are joining forces to create a network of local currency transactions. This means they can trade with each other using their own money, not the US dollar. Now, you might be wondering why this is such a big deal. Well, for decades, the US dollar has been the go-to currency for international trade. But BRICS countries are tired of playing by someone else's rules. They want more control over their economies. And this new system gives them just that. Let's take a closer look at what Russia and India are doing. Their new payment system is designed to make cross-border transactions smooth and easy. No more worrying about exchange rates or US dollar fluctuations. They can simply use their own currencies and get on with business. The CEO of Russia's VTB Bank, Andrei Kostin, put it best when he said, We BRICS must develop our own settlement system that includes the global south, enabling us to conduct transactions in our own national currencies and not the US dollar. This quote shows exactly what BRICS countries are aiming for: financial independence. But it's not just about convenience. This new system could save these countries millions in exchange rates. That's money that can be invested back into their own economies, helping them grow even stronger. And here's something else to think about. This move is just the beginning. Experts are calling it the tip of an iceberg in a massive international effort to move away from the US dollar. More and more countries are looking for ways to trade without relying on American currency. China, for example, has launched its own system called the Cross-Border Interbank Payment System (CIPS). This allows for international transactions directly in Chinese yuan. And it's not just for show. Over 1,500 financial institutions around the world are already using it. So what does all this mean for the future of global trade? Well, it's clear that the BRICS countries are serious about creating a new financial world order. They're not just talking about change, they're making it happen. This new payment revolution could reshape the entire landscape of international commerce. As more countries join in, we might see a world where the US dollar is no longer the king of global trade. It's a bold move, and it's happening right now, whether the rest of the world is ready or not. While digital currencies are making waves, there's another precious asset that BRICS countries are quietly stockpiling. It's shiny, it's valuable, and it's been a symbol of wealth for thousands of years. That's right, we're talking about gold. BRICS nations are on a gold buying spree. And it's not just for show. Since 2018, these countries have been increasing their gold reserves faster than the rest of the world. This isn't a coincidence, it's a strategic move that could change the global financial landscape. Let's break down what's happening. Brazil, Russia, India, China, and South Africa are all boosting their gold holdings. They're not just buying a little here and there. They're making significant purchases that are outpacing other countries around the globe. But why is this important? Well, gold has always been seen as a safe haven during uncertain times. When economies wobble or currencies fluctuate, gold often holds its value. By increasing their gold reserves, BRICS countries are creating a buffer against potential economic shocks. This gold buying trend is part of a bigger picture. BRICS nations are looking for ways to reduce their reliance on the US dollar. By holding more gold, they're diversifying their assets and reducing their exposure to dollar-related risks. It's not just BRICS countries that are turning to gold. 1/3 of all central banks worldwide are planning to increase their gold reserves in 2024. This shows that the move towards gold is gaining momentum on a global scale. The CEO of Russia's VTB Bank, Andrei Kostin, highlighted an important point. He emphasized the need for BRICS to develop their own settlement systems that include the global south. This statement reveals a strategic shift towards local currencies and gold as alternatives to the US dollar. But there's more to this story. The increasing gold reserves of BRICS countries are also a response to international sanctions. After sanctions were imposed on Russia, many countries started looking for ways to protect themselves from similar actions in the future. Buying gold became a way to de-risk themselves away from the US dollar. This shift towards gold is having a significant impact on the global economy. As BRICS countries continue to increase their gold holdings, they're positioning themselves for a future where the US dollar might not be as dominant as it is today. The implications of this gold buying trend are far-reaching. It's not just about having more shiny metal in their vaults. It's about creating a new kind of financial security that doesn't depend on any single currency or country. For the average person, this might seem like distant news that doesn't affect daily life. But these changes in global finance can have real-world impacts. They can influence everything from the price of goods we buy to the value of our savings. As BRICS countries continue to build their golden shield against dollar decline, the world is watching. This trend could reshape international trade, alter global power dynamics, and change the way we think about money itself. While we've been talking about gold, there's another kind of currency that's shaking things up in the BRICS nations. China has just launched something that could change the game for international trade. It's not physical money you can hold in your hand, but it might be just as valuable. China has officially started the first real trade service of its central bank digital currency. This is big news for the BRICS countries and the whole world. China isn't just dipping its toes in the water, it's diving in headfirst. In fact, experts say China is about 10 years ahead of the United States when it comes to digital currency development. But what exactly is this digital currency? And why does it matter? Think of it as electronic money that's backed by China's central bank. It's like the digital version of the yuan, China's official currency. This isn't just some new app or payment system, it's a whole new way of handling money on a national scale. The Chinese government has high hopes for this digital currency. They're looking at it the same way they looked at electric vehicles a few years ago. China invested heavily in electric cars early on, and now they're the world leaders in that industry. They're hoping for the same kind of success with digital currency. Now, you might be wondering how this affects the other BRICS countries. Well, this new digital currency could make a big difference in how these nations trade with each other. One of the main benefits is that it could make transactions cheaper and faster. When countries trade, there are usually fees involved in exchanging currencies, but with a digital currency, those fees could be much lower. It's not just about saving money, though. This digital currency could also make trade between BRICS nations more efficient. Right now, international transactions can take days to process. But with a digital currency, they could happen almost instantly. This means businesses could move faster and be more responsive to market changes. China's digital currency isn't just for show, it's already being put to use. The launch of the central bank digital currency trade service is a big step forward. It shows that China is serious about making this new form of money work in the real world. And as the other BRICS nations watch and learn, they might start developing their own digital currencies too. This move by China could have far-reaching effects on global trade. If more countries start using digital currencies for international transactions, it could change the way the whole world does business. And for the BRICS nations, it could be a way to reduce their reliance on the US dollar even further. So while gold might be the traditional way to store value, digital currencies like China's might be the future of how we actually use money. It's a bold move that shows how technology is changing not just how we communicate or shop, but how entire nations manage their economies. As China leads the way in this digital currency revolution, the other BRICS nations and the rest of the world will be watching closely to see what happens next. While China's digital currency is making waves, there's an even bigger shift happening in the global economy. The International Monetary Fund, or IMF, has just released some surprising predictions about who's going to lead economic growth in the coming years. And it's not who you might expect. The IMF has revised its world economic outlook, and the numbers tell an interesting story. BRICS countries, especially China and India, are set to see much higher growth than many Western nations. This isn't just a small change, it could mean a big shift in the balance of economic power around the world. Let's look at the numbers. The IMF is predicting that China's economy will grow by 5% this year, while India is expected to see an even more impressive 7% growth. These are the kind of numbers that make economists sit up and take notice. Now compare that to what's happening in the West. The United States is expected to grow, but not nearly as fast as China or India. In fact, it's the only G7 country that's predicted to grow above 1%. And things look even tougher for Europe. The euro area is only expected to grow by 0.9%, with Germany, often seen as Europe's economic powerhouse, predicted to grow by just 0.2%. But what do these numbers really mean? Well, according to the IMF, it means that emerging markets in Asia, particularly China and India, are going to be the main engines of global economic growth. In fact, they're expected to account for nearly half of all global growth in the coming years. This shift isn't just about numbers on a page. It could have real impacts on how the world does business. As BRICS countries grow faster, they might have more say in global economic decisions. They could become more attractive for international investment, and their currencies might become more important in world trade. But it's not all smooth sailing for BRICS nations. The IMF report also points out some challenges. There's increasing political and economic uncertainty in the US, which could have ripple effects around the world. The national debt in the US is rising fast, and there are concerns about inflation. These issues have led to some countries losing confidence in the US political system. The IMF warns that upcoming US elections could lead to big changes in economic policy. This uncertainty could have negative effects globally, making it harder for businesses and governments to plan for the future. So what does all this mean for you? Well, as BRICS countries grow stronger economically, we might see changes in everything from the products available in our stores to the value of our currencies. It could mean new job opportunities in some sectors, or changes in how international business is done. This economic power shift isn't happening overnight, but it's clear that the global economic landscape is changing. As BRICS nations rise and some Western economies face challenges, we're seeing a new chapter in the story of the world economy. And as this story unfolds, it's sure to bring both challenges and opportunities for countries around the globe. As we've seen, BRICS countries are making big moves that could change how the world does business. But what does all this mean for the future? Let's take a look at what might be coming next. The BRICS nations are working hard to create a new way of trading that doesn't rely on the US dollar. They're using their own currencies, buying more gold, and even making digital money. This could lead to big changes in how countries around the world buy and sell things. Some experts think this might make the US dollar less important in global trade. Others say it could create new opportunities for countries that aren't part of the BRICS group. So what do you think? Will these changes make the world economy better or worse? And how might they affect your daily life?